What is going on, investors? Hopefully guys are doing well out there. Time to talk about Adobe, basically the last of the major tech stocks to report their earnings. Those crossed just moments ago, and on today's video, we'll get into them. We'll take a look at the revenues, the profits. We'll take a look at the all-important guidance we got for the upcoming quarter as well. We'll compare that to where Wall Street expectations were. We have to discuss this a little bit as well. You got a $20 billion acquisition on the table that the DOJ is fighting. When we roll through the financials over at Adobe, we'll see that maybe it's not the worst thing if Adobe isn't allowed to spend $20 billion on this company. From a competitive standpoint, we have to discuss that as well. And then we'll get over here and look at this from a technical perspective. This one has actually reacted like a lot of stocks that we've been looking at. It's been in a downward channel for basically a year, finally broke out, did a back test, and is rallying in the after hours. I'm seeing up nearly 4%. Again, that's on the heels of those Q1 earnings, which came out after the bell. Over the last year, though, Adobe hasn't done that well, down 21%. Even year to date hasn't really caught a bid like we've seen with other tech stocks, down about 2%, although that will change in the after hours if those gains hold up. Revenue in the most recent quarter came in at $4.66 billion. That was 9.4% growth year over year. Expectations was closer to $4.62 billion. The high end estimate was for $469, the low end $460. So, right there in the middle when it comes to Adobe. Now, they gave us guidance for the upcoming quarter as well. They get a lot of visibility, having, kind of recurring billing over at Adobe. It always seems there's a charge from Adobe on my credit card bills. Upcoming quarter, $4.75 to $4.78 billion in quarterly revenue. Wall Street is expecting right there on the high end up to $4.85. The low end was $4.72. So this guidance is probably good enough based on how the stock has performed over the last year or so. Now, some concerns about this $20 billion Figma acquisition. From the government standpoint, the DOJ is going to go after this one. And obviously, if you've been following this channel for any length of time, we cover a lot of tech stocks, and a lot of them are wrapped up in different types of Department of Justice probes. Now, we've seen Amazon get deals through. I think that Activision deal with Microsoft's probably going to get through. We've seen Xilinx being acquired by AMD, but we've seen some pushback and some denial, most notably that NVIDIA and ARM deal, which I think was a $50 billion deal. The DOJ simply blocked that one. From a financial perspective, this would really transform Adobe. Yes, they have a $150 billion market cap, but we are talking about a company on a run rate of, 4.5 upwards of $5 billion a quarter. That's $20 billion. So they just pledged a year's worth of revenue. I mean, we're talking about cash flows and profits, a year's worth of revenue for Figma. So it will be significant. When we come over to this company's balance sheet, they are not Google, they are not Microsoft. They do not have $20 billion sitting there. And so it's likely investors would get diluted out on that type of deal. Obviously, some revenue would likely come in the door through Figma, and you'd also, I think from Adobe's perspective, eliminate some competition in the marketplace. Now, when we talk about this quarter, $4.65 billion worth of revenue, again, that was 9.4% growth year over year. Everything looking pretty clean with Adobe. Total cost of revenue, one of the reasons why we love this company, one of the reasons why it still gets a high multiple is they have these just massive gross margins, just $568 million to produce this $4.7 billion worth of revenue. That gave you gross profit just under $4.1 billion. You do have operating expenses, and those ticked up probably in excess of our revenue growth over the last year from about 2.2 up to 2.5. That made our operating income at Adobe essentially flat from a rounding perspective year over year, from about 1.6 to about 1.6. That is $1.6 billion. So off of this 4.65, we'll call it $4.7 billion worth of revenue, 1.6 flows down to operating income. And again, this company is trying to acquire a company for $20 billion. So they're pledging well north of a year's worth of operating incomes for this company. They can afford it. Okay. Yes, not from a cash perspective, $4 billion in cash, another 1.6 in receivables. They don't really have the $20 billion just sitting on their balance sheet like some of the other mega cap tech stocks. but they are likely going to be able to leverage the stock. And that's probably one of the reasons why the stock just hasn't performed relatively well, because you're looking at well north of a 10% dilution on this stock. Okay, the way this works is Adobe is going to likely have to issue shares. They'll sell those shares into the marketplace that will dilute anybody that's an existing holder of Adobe stock. And that obviously is negative from anybody holding the stock. But the company is likely not going to have to take on very expensive bank debt or other types of financing that other companies would have to do to pull this off. Now, they do have about $3.6 billion sitting on the balance sheet. I suppose they could get some bank debt for this deal, but a stock trading at well north of $300 per share and $140 billion valuation should really just sell the shares into the marketplace and take the losses. Now, again, some of that already priced into the stock, some of that priced into the performance of the stock, as sophisticated investors understand that if you buy this company now, you're likely going to be diluted by 10, 15, maybe upwards of 20%, as this company will likely have to do some kind of fundraising, again, depending on how long this deal takes to get stretched out. Because when we come over here to cash flows over at Adobe, they burn through all their cash flow. Okay, real solid net income, we'll call that $1.3 billion, basically flat year over year, just a very steady, just subscription business, just rebilling customers like myself over and over again. They produce a strong $1.7 billion worth of positive cash flow in terms of operating cash flows, largely due to the fact that they do pay some employees via stock-based compensation. You have some depreciation as well, which is a non-cash charge. Now, the company is not building buildings. They're not building factories. They're not building a whole lot. So there's nothing to really invest in. So the vast majority, in fact, almost all the cash flow from the operations in the most recent quarter actually went back to buying back the stock. So in essence, what Adobe is doing is they're buying back the stock today that they'll probably have to issue into the future in order to complete this deal if it gets approved from the government. So it could end up being a good deal, could end up being a bad deal, but last year they bought back $2.4 billion in stock. This year, $1.4 billion. You see, they burned through about $164 million in cash over the last year, essentially being kind of cash neutral from an operating perspective. Just a solid company. And if it wasn't, in my opinion, if it wasn't for this overhang of this $20 billion deal, the stock probably would be performing a little bit better than it has over the last year. Now, from a technical perspective, it's doing about, again, like what every tech stock did. It got in this channel represented by kind of this upper channel of a gold line, bottom of the channel is the purple line. It finally broke out. Okay, most of these stocks bottomed sometime in September, October of last year, and then boom, we've been kind of on a rally ever since then. We kind of blew off the top maybe back in January and February, but very common in these types of situations when you go on these kind of longer down stretches, you tend to have some kind of bounce, but then maybe a back test to the top of the channel. That's basically what we saw. And now the stock has bounced up. And if it holds this after hours game of, I'm seeing over 5% gain up to $350 per share, that would put the shares about at this green line here. This stock is just performing like a beautiful technical pattern. Again, in a downward channel, a breakout, a back test to the top of the channel, and now you get a bounce. Now it's decision time. Okay, you'd really need, from a technical perspective, to get back above these highs back here at 400. That would essentially have you starting this type of upper channel. I mean, it's not perfect, but you'd be starting some lows here, higher set of lows. You need to make some higher set of highs. You'd like for this stock to continue to rally up over $400 per share. That would essentially have that confirmed. If you've missed this rally, you want to get in on this stock, you would buy it on subsequent pullbacks. But I'd like to see this one get above $400 per share. Otherwise, we'd consider this one very similar to what Amazon is doing. If it doesn't get above that $400 level, what Amazon has been doing has just been riding down this upper trend line, and that's potentially what could happen with Adobe as well. Folks, that was Adobe. That was essentially the end of earnings season. We'll start again next week. It depends on how you look at it, but it kind of starts and ends, I think, with Adobe, and then we kick things off next week with Nike, and then a few weeks later, we get to these bank stocks, which obviously have been in the news lately. Hopefully, you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.